Today we will be talking about Alibaba's split into 6 new companies, why investors are excited about the breakup, and how Alibaba's breakup into 6 new companies benefits them. As you've already heard by now, Alibaba will be split into 6 different companies. Some will be focused on e-commerce, others will be focused on cloud offerings. The news comes after Jack Ma has been spotted in public after spending a long time outside of China. Alibaba's breakup might be the most important overhaul in the platform's 24-year history. After the split, each of the 6 companies will have their own IPO so they can raise money from investors. As for what the 6 companies will be, both the names of those companies and their respective CEOs have already been decided. Here are the 6 new companies Alibaba split will create. They are the Cloud Intelligence Group, which will take over Alibaba's cloud and artificial intelligence operations. Then we have their Local Services Group, which will run Elmi, which is Alibaba's food delivery arm that has roughly 30% market share of all food delivery services in China. There's Alibaba's logistics arm that will be spun off into a new company called Kniao Smart Logistics. The Global Digital Commerce Group will house Alibaba's international businesses, mainly online shopping websites, which Alibaba set up in other countries to take over local markets. Alibaba's streaming segment will be spun off into the Digital Media and Entertainment Group, which will own China's version of YouTube, Youku, and its film production unit. Finally, the Taobao Tmall Commerce Group will be responsible for Alibaba's business-to-customer segment. They will be managing China's online shopping websites, Tmall and Taobao. This 6 company is interesting because Taobao and Tmall Commerce Group is the only company out of the 6 that will be completely owned by Alibaba Group. The rest of the 5 new companies will be allowed to raise capital from outside investors and even file for their own IPOs if they want. Alibaba's company breakup is a relief to many investors. Since 2020, Alibaba's stock price has been on a downward trend. We all know how Jack Ma's remarks angered China's government. Their Ant IPO was forcibly cancelled. The subsequent crackdown on tech companies made it difficult to do business in China. Regulations unfavorable to large companies in China took hold. It was a nightmare. Alibaba took the worst hit. $600 billion were wiped from their Alibaba shares. After Alibaba announced it would split up into 6 companies, its share price rose. Investors are quite optimistic about Alibaba's plan to split up into 6 new companies. The prevailing logic is Alibaba was the company that drew the government's ire. If Alibaba was broken up into pieces, the new companies wouldn't be guilty of what their old parent company was accused of. A larger company might be prone to more regulatory crackdowns by China's government, but a smaller company might be subjected to less stringent regulations. By splitting up, Alibaba will offer its business arms a new lease of life. That's not the only benefit here. By splitting up, the move is poised to unlock new shareholder value through the removal of the conglomerate discount. What do I mean by that? Well, the conglomerate's discount is the tendency of investors to value a group of businesses or giant conglomerates less than the sum of its parts. Alibaba is a giant corporate behemoth, so it was valued lower than what it should have been valued at even before the 2020 government crackdown. Sure, Alibaba has a lot of businesses that bring in the money. However, having tons of businesses means your company will be valued at the conglomerate's discount. When a company is too large, it may be difficult to value the businesses within it because you can't differentiate the loss-making companies with the profitable ones. A conglomerate financial statement is very complex. They also focus on the overall performance of the company, neglecting to inform investors of how well or worse off their smaller businesses are performing. Earnings reports for large conglomerates like Alibaba or IBM are a mixed bag, so people look at the company as a whole rather than giving each division or business the closer inspection it deserves. That is why investors will attribute less value to conglomerates and their other businesses within them other than the main sources of revenue the company is known for. In Alibaba's case, most investors saw Alibaba only as an e-commerce giant. Even though it has a large cloud business, they had a large streaming and movie business, and they had a large market share in China's food delivery market. It wouldn't be an exaggeration to say Alibaba is competing for the number 1 spot against the top food delivery company in China, Meituan. Most investors, however, did not factor Alibaba's food delivery arm when they consider investing in Alibaba. Another way Alibaba will benefit from the split is the enhanced focus on their businesses individually. In large conglomerates like Alibaba, it's usually hard to focus on its smaller business arms. This narrow focus stems from conflicting visions between different segments of management who tend to focus on the core business that makes up most of the money within the company at the expense of the rest of their other businesses, which might have potential to make more money but are ignored unintentionally as long as their financials do not suffer. As Alibaba splits into different companies, the 6 new companies will benefit from more control of their vision and value proposition moving forward. Now each company will have management which can focus solely on their businesses instead of trying to follow a vision upper management might try to impose without proper knowledge of what they are trying to sell. So far, some of the 6 new companies already have plans moving forward. Alibaba's logistics arm, Know, plans to IPO in Hong Kong for $2 billion in 2024. All of Alibaba's businesses will operate independently after the breakup. However, before you think of buying Alibaba stock, there are still a lot of unknowns leading up to the split. We don't even know if the holders of Alibaba stock will receive any stock of the 6 new companies. The only thing that's certain is the company restructuring will occur. Thank you for watching. If you enjoyed yourself here, subscribe to the channel for more videos like this one.